Gold or Bitcoin? What should you buy? Which is the best store of value? Well, we'll find out in this three-part video. A Bitcoin analysis, a gold analysis, and the final verdict. That's it. And if you like my content, I politely invite you to subscribe and be one of the cousins. First thing, let's talk about Bitcoin. There are people who say that Bitcoin is the best store of value, and there are people who say that it is definitely not a store of value. So what defines a store of value? A good store of value needs 5 things. First, scarcity. It must be relatively rare or limited in supply. Second, non-deterioration. It can't degrade or lose its essence over time. Third, global acceptance. It needs to be widely recognized as a medium of exchange and store of value. Fourth, long history of acceptance. It must have a proven record of trust over time. And fifth, intrinsic value. It should hold value beyond just being money. Now let's analyze Bitcoin. Bitcoin checks the first box perfectly. Its supply is mathematically capped at 21 million coins. And you probably know that already. No central bank, no government, not even its creator can issue more. That fixed supply is enforced by code, audited by thousands of nodes around the world. Every 4 years, the number of new Bitcoins entering circulation is cut in half, a process called the halving. This schedule makes Bitcoin scarcer over time, and historically, each halving cycle has been followed by massive price appreciation. In other words, Bitcoin doesn't just have limited supply, it has shrinking inflation. Now, the second factor, non-deterioration. Bitcoin's durability comes from mathematics and decentralization. As long as the internet exists, Bitcoin exists. Its blockchain has never been hacked, never been reversed, and every single transaction since 2009 is still verifiable. You can store it on a flash drive, memorize your private keys, or secure it in cold storage. It can't be corroded, burned, or confiscated without access to those keys. There are definitely risks that would affect Bitcoin's longevity, such as quantum computing or the image of a future where the internet ceases to exist. But if these things come to fruition, your Bitcoin wallet will be the least of your worries. Because if quantum computing evolves so far as to break the blockchain, we won't have security in traditional banks, social networks, or anything. Now, the third factor, global acceptance. This is where Bitcoin has made the most progress in the shortest amount of time. In just over a decade, it went from being used by a small group of developers to being accepted by millions of merchants worldwide. You can now buy a Tesla, pay for flights, donate to charities, or even purchase real estate using Bitcoin. Major payment processors like PayPal and Stripe integrate it, and several countries from El Salvador to Switzerland recognize it as a legitimate form of payment. Even more important than commercial acceptance is institutional acceptance. Financial giants like BlackRock, Fidelity, and JP Morgan are now integrating Bitcoin into their products and portfolios. Central banks and governments track it, regulate it, and in some cases, even hold it. So while Bitcoin is not yet as universally accepted as gold or the US dollar, its growth curve is exponential. Its network effect is already global. Now, the fourth factor, long history of acceptance. And this is where Bitcoin still falls short for now. Gold has a 5,000-year track record. Fiat currencies, at least a few centuries. Bitcoin has just over 15 years of history, but in those 15 years, it has survived every possible test. Government bans, exchange collapses, regulatory crackdowns, and countless "Bitcoin is dead" headlines. Each time, it came back stronger, more resilient, and more decentralized. If longevity is measured not by years, but by how many crises you've endured, Bitcoin's record is impressive. It's still standing and growing. And finally, the fifth factor, intrinsic value. This is the most debated one. Critics say Bitcoin has none because it doesn't produce cash flow or have industrial use. But its utility isn't physical, it's monetary. Bitcoin's intrinsic value lies in what it enables: a censorship-resistant, borderless, programmable form of money that cannot be inflated or seized. Its value is the freedom it provides. Think about it. For someone living under hyperinflation or in a country with strict capital controls, Bitcoin isn't speculation, it's survival. It's digital property that you can carry across borders in your memory. No vault, no bank, no permission. To be quite honest, Bitcoin doesn't pass the test easily. In one of the factors, it's not even close to passing the test yet, but it's on its way there. So the final verdict is that Bitcoin isn't yet a store of value, but it's on its way to becoming one, and maybe you shouldn't be left out. Now let's talk about gold. After spending most of the 2010s moving sideways, gold entered a new era. As of October 16, 2025, it's trading above $4,200 per ounce, the highest price in history. The world's oldest store of value is having one of its biggest moments ever because uncertainty is back. Geopolitical tensions, rate cut expectations in the US, and record levels of central bank buying are all pushing demand to new heights. For countries like China and Russia, gold isn't just a hedge, it's a way to reduce dependence on the dollar. And for investors, it's once again the go-to refuge when things look shaky. Will this boom continue? Possibly. If interest rates keep falling and global risk remains high, gold has room to run. But it's not guaranteed. If inflation slows or the dollar strengthens again, gold could pause or correct. That's the trade-off of owning an asset that thrives on fear. It shines when the world doesn't. Let's address the elephant in the room. There are plenty of people who say gold is not an investment, and they have a point. Gold doesn't pay dividends. It doesn't produce cash flow. It doesn't innovate, hire employees, or grow profits. As Warren Buffett famously said, gold just sits there and looks at you. In that sense, it's not an investment, it's insurance. It doesn't make you rich, but it can keep you rich. Gold's job isn't to outperform stocks. Its job is to preserve purchasing power when everything else fails. And it wasn't always like this. For most of modern history, gold was money. Under the gold standard, every US dollar was backed by a fixed amount of gold. That system ended in 1971 when President Richard Nixon closed the gold window and stopped converting dollars into gold. From that moment on, money became what governments said it was, paper backed by trust, not metal. That was the end of the gold pact, but it was also the beginning of gold as a free market asset. No longer fixed to a currency, its price could now float. And since then, it has gone from $35 an ounce to over $4,000. Now let's analyze gold through the same 5 lenses we used for Bitcoin. First, scarcity. Gold is rare. Annual production adds only about 1.5% to the global supply. It's expensive to mine, difficult to find, and can't be created artificially. In a world of unlimited money printing, that scarcity matters more than ever. Second, non-deterioration. Gold doesn't rust, corrode, or decay. The same gold used in ancient Egypt still exists today. It's the ultimate example of durability. Third, global acceptance. Gold is universal. Every culture, every country, and every generation recognizes it as valuable. It's traded 24 hours a day across every major financial center on the planet. There's no debate about its legitimacy. Fourth, long history of acceptance. This one's obvious. Gold has been money for over 5,000 years. Empires have risen and fallen around it, and it's still here. There's no stronger track record for value preservation. And fifth, intrinsic value. Unlike Bitcoin, gold has physical use. It's used in jewelry, electronics, and even medicine. Those uses create a baseline demand that doesn't depend purely on investor sentiment. So, when you look at gold objectively, it checks every box. The only thing it doesn't do is grow by itself, and that's why people love to hate it, but that's missing the point. Gold doesn't need to make you money. Its purpose is to protect what you already made. It's not the asset that builds empires, it's the one that survives them. So gold is definitely a good store of value. Okay, let's move to the last part. What should you have in your wallet? Well, it depends, but I'm all for diversification, so I'd say both. I have Bitcoin, and I think it's a convex asset. What is a convex asset? In finance, convexity describes an investment that has limited downside, but potentially unlimited upside. It's the kind of bet where if you're wrong, you lose little, but if you're right, you win a lot. But I definitely don't see Bitcoin as my safe haven in crises. Also because Bitcoin has fallen during several heated moments in the global economy. In March 2020, when the COVID-19 pandemic crashed global markets, Bitcoin fell over 50% in just 2 days, dropping from around $9,000 to nearly $4,000, while gold rose slightly as investors rushed to safety. During the Russia-Ukraine conflict in February 2022, Bitcoin also dropped about 17% in the first weeks of the war, following stock markets, not gold. And in 2022's inflation spike, when central banks hiked rates aggressively, Bitcoin lost more than 65% of its value over the year, while gold stayed relatively flat, preserving purchasing power. So you can have both in your wallet, but with different purposes in mind. They can even complement each other. Gold is the shield. It protects your purchasing power when things go wrong. When governments print too much money, when inflation bites markets or when global panic hits, gold tends to hold or even rise. That's why central banks keep buying it. In 2024 alone, they purchased over 1,000 tons of gold, one of the highest levels in modern history. They're not buying NFTs, they're buying gold. Bitcoin, on the other hand, is the sword. It's not your hedge against panic, it's your hedge against the system itself, against the endless money printing, surveillance, and control that define modern finance. It's portable, independent, and censorship resistant. It gives you optionality, the chance to play the next era of monetary history. That's it, cousins. Stay invested.